Looking good, my man. Looking good. All right, so I don't know. Did you catch the last discussion that I was having with Cole?
No, I did not.
Oh, that's fair. That's fine. So we'll just jump off where him and I left. So first of all, thanks for coming on the show again today. Always good to have you. Give yourself a little quick intro, real quick. Tell people who you are, real quick, that who haven't seen you, don't know you, and then we'll jump right into it.
Teron Mobley, Chicago. It's my hometown. Currently, San Antonio, Texas. United States Air Force veteran. Full-time father. Full-time, full-time OG. Full-time real dude. That's about it.
Okay, full time. That's a lot of work. How do you work so many hours, man?
Hey man, shit. 25. Was it 25/8?
Oh, you're talking about 80-20 Pareto principle?
Oh shit. Whatever you want, we can do that
I
too.
think that's what it is. I think it's the Pareto
Yeah, I'm
principle.
a.
Let's see. Let's see.
Well, yeah. I'm
I
the
got this.
20 that does the 80.
Yeah, yeah. Pareto principle, 80-20. Yeah,
Yeah.
20% effort for 80% of the results. If only it were
Yeah,
that
20,
easy.
20% of the people do 80% of the work.
That's also true. All right, so basically, when Cole and I left off, I had posed the question to him. So I played this clip by Dr. Oz, which basically Dr. Oz is saying that he read. Did you hear the clip yet or no? The Dr. Oz clip?
No,
All right, I'll play it for you.
no.
It's 38 seconds. For those of you who have already seen it, I appreciate you standing by for another 40 seconds. I'm going to play it for Mo here.
Dr. Oz, help us. Well, first, we need our mojo back. Let's start with things that are really critical to the nation where we think we might be able to open without getting into a lot of trouble. Yeah, I tell you, schools are a very appetizing opportunity. I just saw a nice piece in the Lancet arguing that the opening of schools may only cost us 2 to 3% in terms of total mortality. And, that's any life is a life lost. But to get every child back into a school where they're safely being educated, being fed, and making the most out of their lives with a theoretical risk in the backside, it might be a trade-off some folks would consider. We need to get industry back, supply lines. I mean, things that we can do without putting the nation at risk.
So basically, right, they're talking about the economy. And so he was saying, and again, I've heard this from a lot of people. It's a valid argument, and it may not be right, but it's valid to ask this question, and it's valid to talk about it in this way. So there's one body of thought that says we shut the economy down, prevent people from getting sick, and then go on from there. That's what we're doing now. The other body of thought is, okay, it's time to reopen the economy. We know that by doing so, there will be collateral damage. And, based upon our previous employment experience, that was something that people had an afterthought about, which was the collateral damage and the lives lost. So what is your opinion on the matter?
I think that I think that we do need to reopen our economy, and I say that because I heard Cuomo this week, Governor Cuomo,
Hmm.
and he made a quote. He said, and his message was to Trump. He says, "Don't pass the buck without passing the bucks." But he was saying that in reference to New York not having any money. Pretty much, I mean, they're starting to be exposed. The weaknesses in their budget is starting to be exposed. So my thing there is, you have to decide at what or how much you're willing to give up for the amount of security that you're asking for. So I get it right now. There's not a lot of security, group security, social security. There's not a good sense of it.
Right.
Being that nobody knows what's going on. But like I said, I'm the guy that watches everything the Fed does. So to me, it's almost troubling, just the amount of money that the Fed has spent, just in this short period of time. So to somebody, a state like New York, if the Fed prints, $7 trillion and the state of New York gets 2 trillion, that's $2 trillion that the Fed now owns for the state of New York. So you have to decide, that's influence. If you ask me, money is influence. So you have to decide how much you're willing to give up. So if we're gonna sit and be at home, if we're gonna be a work from home economy, we're gonna give up a lot, for that, because just think about it. I look at somebody like my mother's job. She works from home. And now the office space is being used for storage for of equipment. So now the office space is repurposed, but now the cost is passed on. Some of the cost is passed on to the worker now. So the utilities, as far as the internet, the electricity, so on and so forth. Like these things are all passed on to the worker now. And then the employer gets to save money by not using so much and then utilizing the space, the industrial space for something else. So
Right.
very interesting how, like I said, I mean, it's very interesting how this all is played out. And then two, if you look, I'm sure, I don't know if it's this way in Chicago, but if you look around the city of San Antonio, there's a lot of empty commercial real estate space. Even malls, they're not how they used to be. You've seen the small stores disappear, your Macy's, your JCPenney's, your Dillard's. I mean, I don't know, whatever else that was around when we were, in our
Right.
mall hopping days.
Right.
You don't see this stuff anymore. Everything's online now, so it's that way in San Antonio. I've spoken to, plenty of other people, and it's that way where they live as well. So I think that the banks made out in all of this because their customers, which are the leaseholders of these industrial properties, they're the ones that have been bailed out from all of this.
Right.
So, it's really interesting, so we have to decide, to what point are we going to make this life or death? And if we're going to make it life or death, because the Federal Reserve's mandate is employment.
So
So if we're going to,
yeah. So I was telling Cole about that 7 trillion figure that you were talking about.
Mm-hmm.
So explain to people why, because they're throwing around 2 trillion, right? Tell us why it's 7.
yeah. Well, 2 trillion based on the package that was passed via Congress. But there's another $4 trillion that the Fed has printed prior to this, along with, and so here's the scary part about the other 4 trillion. We've lowered interest rates to 0. So what the Fed is doing is they're buying bonds. And these bonds, there's different grades of bonds. You can have corporate bonds, municipal bonds. But the Fed buys bonds. And these bonds are, they have all lengths, 2 months, 10-year, 20-year, 30-year. And the Fed controls the shorter end of the range.
Okay.
But anyway, with these bonds, this is what you as governments, as organizations, these are things that you have some form of collateral, some form of debt. It's all collateralized debt. So if the Fed comes in and buys your debt for cheaper than what you paid for it, you're at a loss already. So that's one thing. And then if I come in and buy your debt for cheap and I'm the individual that controls the interest rates, what do you think I'm going to do in the long run? I'm going to raise the rates on the debt that I just purchased.
Right.
So when inflation comes back around, it's going to be, it's going to be crazy. We're going to start yelling at each other again. Why do we print this much money? Everybody's got short memories. We're going to forget. But that's what the Fed's doing. $4 trillion in bonds that cut interest rates. And, so your city, your state, certain companies, if their debt is collateralized in the form of bonds, that's what the Fed is purchasing.
So for the average person who, that's a lot for them. How do I say this? What can the average person be looking towards as an indicator for what they need to do moving forward, right? So the average person meaning they're going to start going back to work. They don't have thousands of dollars to invest, right? So the stock market is something that could be used to signal them to do something else. Like maybe now is a good time for them to maybe start looking at property or saving in what sort of asset. So do we need to be stacking dollars? Do we need to be stacking gold? Like, what do you feel people should be doing? Like the lay person, not the Wall Street guy who makes $250,000 a year, right?
I think that first you have to define whatever goals you're wanting to achieve. And then two, if you're somebody like me, I just look at percentages. To me, numbers are enticing. So For your average savings account, you're getting 0.02% interest. You're going to get that you're going to get a greater yield, your interest rate, you're going to get a greater yield from something like gold or an equity, a stock such as Amazon or Apple or something of that fashion. But if you're really wanting to, if you're the average lay person, defining your goals is one thing, and then two, setting aside, most people think that that investing is for people that have a ton of money. That's the furthest thing from the truth. You just need to start somewhere. Everybody has 10, 15, 20, $30 to set aside per week.
Right.
So if you sit $25 a week, $25 per week, that's $100 per month, $1,200 a year. $1,200 a year gets you, I don't know what Apple is now, maybe 270 or something close to there. But, you can get 3 to 4 shares of Apple. You can even break it into smaller things. Things are really cheap right now because of the pandemic. We had this big sell-off in the market. It was just a mass panic selling, liquidate. They call it a liquidation break. But if you're somebody that's been waiting for a long time, that was the perfect opportunity. And you still have time to hop in on some of these things.
Yeah. Okay. So in that light, right? So I want to shift gears to talk about your reaction to striking workers. So I'm going to play this video and then we'll get some commentary from it thereafter because, true to form, this is going to affect the market as well, right? So
in the home of the U.S. auto industry, Michigan residents naturally took to the road to voice their anger. Operation Gridlock also spilled out into the streets of Michigan's capital, calling for an end to one of the strictest lockdowns in the United States and a new beginning for businesses that had been shuttered for weeks.
This arbitrary blanket spread of shutting down businesses about putting all of these workers out of business it's a disaster.
But Michigan is also one of the fastest growing coronavirus hotspots in the nation. And Governor Gretchen Whitmer, who has banned residents even from traveling to their own vacation homes, isn't backing down.
I know that people are angry, and that's okay. And if you want to take it out and send it my way, if it makes you feel better, that's fine. I support your right to free speech, and I respect your opinions. I just urge you, don't put yourself at risk. And don't put others at risk either.
In one of the nation's newest hotspots, South Dakota, more than 500 workers at this now closed Smithfield pork processing plant have tested positive for coronavirus, and fear is spreading just as quickly.
You'd see very crowded departments, very crowded floors. You'd see narrow hallways, narrow staircases.
With no national plan in the U.S., each state is making its own rules, which means there is no uniform strategy across state lines. The U.S. has a patchwork of inconsistent laws. In New York, people are now required to wear a mask when out. Here in Chicago, the mayor has shut down the waterfront so people can't gather here. But South Dakota is one of 5 states with no lockdown and few rules. South Dakota Governor Kristi Noem is making no apologies.
The plant here is incredibly important, not just to Sioux Falls, not to South Dakota, but to our nation.
And with governors in Michigan and elsewhere facing mounting pressure to reopen businesses, some wonder whether the inaction of neighboring states will keep the virus alive and a threat to all states for months to come. John Henry.
Right. So that's an example of people who want to get back to work. There's also some examples coming out of California of workers who have been working through this whole pandemic, like the fast food workers, workers at the Instacart, the delivery workers, the people that work at grocery stores. Some of those people are now, because of lack of PPE, they're not working. I heard a story about a McDonald's in California where their way of striking was because the drive-thru was the only thing open at McDonald's. The employees were driving around the building in a circle in their cars to block anyone from coming into the drive-thru, which I thought was pretty good and effective. But so we're about to have a working crisis of sorts, whether people are working or they're not working, or they are working and not having the right equipment, so they're not working. if that makes sense. How do you see this affecting the market, and where do we go from here? What do you think?
I think that I can make two arguments. The first thing that I'm going to say is I have no clue what's going to happen.
Nice.
Nobody does.
Yeah.
But this could affect the market two ways. And from what I've seen, based on media coverage and the market reaction, the market wants everyone to go back to work. So every announcement that's been made in regards to opening up the economy, any positive news in regards to virus developments or vaccine developments or any trials or anything like that. The latest thing was the trial in Chicago. I think 125 participants, only 2 people died, and the market went crazy based upon that. And then when Trump came out and said that he was going to reopen the states, or he was going to release the authority to the governors,
right?
The market went crazy based on that too. But going forward, I think what the market wants is some form of certainty. And how you get that is based on guidance provided from these companies based on their earnings. Some companies I've listened to their earning calls here recently, Nike and Starbucks. And from what they say in China, they've rebounded. They're looking for a strong rebound, in the second half of the year. So if that proves true, you're going to see the market higher. And it was weird, prior to all this happening, all you saw was, all-time high, all-time high, all-time high. And then we went back to, okay, this is the lowest low since 1918. But if we do rebound positively in the second half, you're going to see the market higher than it was prior to where we sold off.
So you think So you're saying that you think like once the economy rebounds in this V that everyone's talking about, that we're going to go higher.
It's going to be a really ugly V. It's going to be like a VU. Yeah, and it's based on market conditions, and these companies have to report earnings. So you're not going to have people just going in blindly now.
So what you're saying is you think that we're going to surpass previous all-time highs?
Yes, I do believe that. I think every form of currency, even Bitcoin this year, I think that this is going to be a year to which people, we started off really depressed, but I believe the second half of the year we're going to rebound.
Man, I hope so, because 2020 has been just, and it's not even for me. I mean, this is like meme stuff. Everyone is like, wow, 2020, go fuck yourself. So
here, another thing with the market, while the Fed buying treasury. So people think that, the Fed's printing this money, they're buying stocks. They're not buying stocks. They're just buying the debt from the companies, right?
Yes.
And so as an investor, when I look and I see that, these guys can't service their own debt, it makes me want to sell the stock. But now that the Fed has came in and serviced the debt, so to say, or giving these guys a pass, that's what, as an investor, I look at that and say, okay, well, I'll give them a pass for, 1 quarter.
Right.
So, there's plenty of companies that, I'm looking at going into next quarter, and I want to hear from the CEOs themselves. Hey, this is what happened. These were the damages, or we couldn't assess it, whatever it is, whatever the case may be.
Right.
But I do think that we're going to respond positively. There's too much pent up. If you ask me, everybody's just pent up. Everybody's ready to just go out and do something.
Yeah, definitely. Well, on that,
you can't just have people just. That's the scary part too. You can't just have people go back to work. There's people that have been out of work for how long? 30 days?
Right.
And they live check to check.
Right.
And so
that's where it's going to.
What do I do?
Yeah, that's where it's going to get a little hairy. Once they reopen the economy, infection rates, I predict, are going to spike again. We've found out recently that it's shocking that about 50%, if not more, of COVID cases that are test positive are asymptomatic test positive cases. So, All right. Well, on that note, sir, we're going to keep it moving here. I appreciate your time today and your insight on the market. Definitely looking forward to having you back once again. Do you have anything to plug? You got a Twitter or fucking Trading View or something you want people to check you out?
Nah, man, I don't do any of that, man. But, certain people, how to reach me. So if you need any advice or anything like that, I'm more of a, I take care of, people that, near and dear. So.
Yeah, I appreciate that. So you're basically just telling me, not everyone else, right?
Well, no, I mean, if you're interested, drop me a line or whatever. Yeah,
Yeah.
if you're interested, just get in touch with me, and I can guide you in the right direction. But
Yeah, no
it's
worries.
one of those things. I like to put training wheels on people.
No worries. I could probably do that. If anybody asks me, I'll make sure that they give you or that they get a hold of you. So, all right,
That's
Teron,
right,
man, Mo, I appreciate your time, and I'll talk to you soon, brother.
All right, peace, bro.
Thank you.